All right, guys. Welcome to January 25th's pre-recorded Zoom. Yeah, this month went by real quick. Kind of happy about it though. Been a very interesting beginning of 2022. Especially looking at these monthly closures, really looks like from a EURUSD perspective, we are still going to go lower, which I would like to see, especially with DXY, which is what we'll pretty much start off with covering first. So our monthly closures are about to close in 6 days, and we have, pretty much acknowledged the potential bullish and bearish sentiments in the form of POIs and reactions, because as we have seen before, or we have seen from an overall sense, right, we could still argue that we are bearish. This low and even this low, right, can be considered unwillingness from an internal standpoint, a major intraday, potentially even swing. But from the overall perspective, there is still a possibility of a bearish sentiment, which is why we have, considered that possibility. Because from an overall standpoint, right, it is still possible that, we get a bearish conversion from a, major intraday swing sense, and we get, those very bigger swings into the downside in terms of the dollar. But because we are day traders, because we trade on a weekly basis, it's imperative that we actually look into, right, our internal structure. And as we can see, our internal structure is bullish, right? So now that we're considering this, right, we noted last week that our POI that we had referenced is very important. And because we then got a second reaction, this here is not order flow disruption until the high breaks of the POI. We know this, it's course material. But as we start to zoom in, right, I hope you guys can't hear the background. I apologize if you do. Either way though, we had pretty much, got this to an if this then that scenario. So if we are to properly react from this M15 POI, I believe it's H1 POI, M30 POI. Yeah, M30 POI, potentially even H1. No, not H1. But, excuse me, if we were to get a proper bearish conversion, we were able to pretty much assume that we would start chasing previous relative equal lows, and we could see the bearish sentiment come into play based on a POI, and we could have seen the second reaction as just a liquidity grab because internally low, high, retracement, continuation, right? But because we broke through the POI, not only, that isn't order flow disruption, that is actually just a liquidity grab internally because there was actually no reaction to the downside. This is actually a preliminary structure break. So if we take from this high to this low, retracement, continuation, we now had high to low, break of structure, internal structure, meaning this is now a liquidity grab. We can now see this as unwillingness. And once we see the continuation to the upside, which is referenced by the H4 POI that we had mentioned, this is now order flow disruption, right? Because we actually had general reactions from the POI that then failed. So from a sentiment perspective, I'm very bullish. I'd love to see what we get from an internal standpoint, right? Because we have referenced this entire POI. I'm going to make this smaller. And make this smaller too. Right, so now we can focus on the intermediate structure, which in my opinion should continue higher. There really is no clear mitigation occurring here, especially because from an order flow perspective, I'm looking high. This could be a potential reference point, but that unfortunately never caused a reaction, and we're seeing the bullishness show its hand. So now, honestly, I'm pretty bullish on this for the medium term, unless obviously we get some type of, unless we get essentially what happened here, but inversely here, and we would transition into a bearish sentiment. But as of now, it really looks like we want to continue higher, especially from a daily time frame perspective. just because I don't see any clear POIs, like we could start, you know, picking out, for example, wicks, or we could start picking out stuff, but our internal direction is bullish, so I can only assume bullishness until then. But yeah, this is pretty much supporting the AU cells that we had mentioned. And we had pretty much confirmed the sentiment, the overall bias, based on the reaction of the daily inefficiency, which we discussed last week. And you guys know that pretty much we're around here, I believe, on Friday, and you guys know that we were still bearish and we were anticipating hopefully a small recovery, but unfortunately, right, we pretty much missed out on the continuation there, which fell for another, what, 100? Yeah, a good 100. So now, right, we are now technically overextended, right? We're technically pretty overextended. We haven't really seen the confirmation of this leg from a high, low, high, low, high, low. We could start seeing, right, a high be taken out and a potential bearish conversion, so we can continue lower, just because the overall direction is still bearish. This has been the cleanest one, in my opinion, at EU. And yeah, I mean, no real reason to think otherwise yet. But once you start diving in internally, it's going to be important to see how we react basically from where we are right now, because from a directional standpoint, right, you guys know that this here is our turbulence point. This is what generated the move to the downside. And why do I mean, or why am I saying that? Well, this is the last time we saw a continuation BOS, which solidifies the internal range. But because this is M15, I don't want to consider that the major intraday. I'd consider that more minor intraday. But because we saw the break of structure, then the immediate break back down, that's technically a liquidity grab and an order flow continuation based on inefficiency. So this is just continuing lower, lower, and lower with no true retracement. So now that we actually got a retracement, right, we are seeing, right, a very crucial point, because this is now what pretty much solidifies the range as high, low, retracement internally from a minor intraday sense. So as I start to dive deeper, right, it's now very, very crucial what happens here. This is very, very crucial, because I'm seeing like wick here be taken out, so that means maybe internally there could be something shown there. And as we can see here, no full break, but because we are still overall bearish, right, instead of thinking of this, for me, in my opinion, as continuation BOS, continuation and reversal, right, I'm more so considering the fact that maybe we see this and this into, right, a potential bearish liquidity grab. But it is about to be 11 a.m. The day's pretty much over now. Nothing too much today in terms of price action. A bit sloppy, if I'm being honest. Even if we dive into M1, really not much in terms of an intraday sense, maybe scalping sense. Yeah, I mean, but you can argue that almost every day, right? But I want those major intraday swing trades, and not really much to show today. So it's important to see, right, if that is a potential liquidity grab, or if the low is just if this is just, you know, a broker issue and it's just relative equal lows. It's going to be important to see what happens based on this reaction, because if we now get, for example, a push down, right, we had a continuation BOS and then a reversal. That's a structural disruption. So now that means I can then look for short opportunities tomorrow maybe and pursue liquidity, which that in of itself is what, 45 pips. But that's all pretty much. I would need, you know, obviously the confirmation of the structural disruption in order to even assume that. Moving on to EU, this is a cool one. I think on Friday, before we got into Dom stuff, we had discussed this. We had discussed that this was a very, very crucial area in terms of the directional bias. And although you guys know we don't like to trade internal liquidity, I mean internal low liquidity, and by that I mean just choppy price action, no man's land technically. internally. Don't like to trade that. But from a bias perspective, we said that generally if we are considering the continuation of bearishness, then we are pretty much assuming that this is a very crucial point. And let's say we theoretically we took a trade there with a 4 pip stop that pretty much went 50 pips, but I don't really care more about the trade. I care more that the bias was correct, right? If you can get the direction correct, all you need to do is build models on how to find entries based on that, and there you go. Excuse me. But yeah, I mean, with EURUSD, we're pretty much calling the direction, you know, perfectly. Now it's just a matter of getting those, you know, that choppy price action to give us actual opportunities. But yeah, I mean, we're approaching liquidity that we had pretty much already mentioned before, and because we had already given, you know, relatively high a continuation BOS, just like AU, right? We see the continuation BOS liquidity grab back into a range discount premium, I'm sorry. And internally, right, you see the internal range, the final preliminary range that came into a POI. I believe I noted this yesterday. I know I didn't record this on Zoom. I actually had somebody over and I was reviewing this stuff with them. But pretty much we were essentially, I was backtesting what you guys had traded yesterday, and that was here. I know a couple of you guys did post that, and I was trying to see which would have made sense, which was more aggressive, which was more conservative. Actually see, because I believe yeah, I believe I remember juicing something. Yeah, here we go. Perfect. Right, aggressive entry. Was looking at this. Right, the aggressive entry here based on liquidity grab, right? Very, very aggressive, very, very counter trend. And let me actually do this in red, and by that I mean liquidity grab into discount, potentially POI, invalidation down here, obviously. But from a order flow perspective, I like to see structure high, low, break into, right, the character change here. And this would have been a very, very good trade, very, very high probability trade. Just because you get the full conversion before actually taking the counter trend execution. And as you can see, yeah, that went for 24 pips. Very nice intraday, and we reacted from here. Very, very pretty distribution. Excuse me. Very, very nice distribution being shown. Let's see if there's anything with volume. Lower volume, low volume. Yeah, very nice conversion. But yeah, as of now, still bearish. Just still bearish. No reason to think otherwise. I just want to see what type of conversion we can get. See if we can get something high probable tomorrow morning or even Thursday. But yeah, I mean, with that being said, it seems like we got our direction on point. Now it's just a matter of you guys finding those entries. So yeah, with that being said, I'll see you guys on Friday.